Welcome to this short executive knowledge lecture on topic 2, paper 6 of the SFC licensing exams. This topic covers back office compliance, more specifically the subsidiary legislation that you need to know for this exam, which are the rules, the finance resource rules, client money rules, client security rules, etc. Now this is an important topic for paper 6 because it is nowhere near as much material as topics 1 and 3. Now topics 1 and 3 are heavily examined at paper 6, especially topic 3. Topic 2 is not as heavily examined, but is still significant. I reckon you're going to see between 7 to 9 questions. So it is a topic that's well worth getting on top of because you get a reasonably good return for your time invested. You may say, well, what about topic 4? At topic 4, probably 1 question. I always emphasize topic 2 when I'm covering paper 6 material because, as I just say, you get a good return from your time invested. So I'd read through the material, I'd do the practice questions, I'd be looking to score high on topic 2. Now, I will emphasize the important points to help you understand the core material you need to know to sit this exam, and a copy of the lecture notes you see on the screen can be downloaded from the Executive Knowledge website under the Paper 6 resources. As ever, I strongly recommend that you supplement this learning with question practice, and over 230 practice questions for paper 6 can be found on Examinator.online, and I refer you to the website address at the bottom of these pages. Now, let's see what we have on the menu for topic 2. SFC notification requirements. I'm going to cover that very shortly. And there always seems to be at least 1 question on that section, and it's not very difficult. Then we have the financial resource rules, that is the capital requirements for asset managers. Section 3, there's not much to it at all. Client securities, the client securities rules, and paper 6, probably just 1 question. And as we will see, very few points to cover. Client money, a little bit more detail there in section 4. Record keeping, really the accounting records that need to be kept by licensed corporations and registered institutions, we'll cover in section 5. Section 6, a bit of a strange one, contract notes, statements of account and receipts, because the majority of it is not applicable to asset managers, which makes things easier. But then unfortunately, the notes cover provisions applicable to other intermediaries, that's other than asset managers. So in fact, we have to cover the bulk of that set of rules. We'll then look in section 7 at accounts and audit, rarely examined, to be honest. And then section 8. Now, I will pay particular attention to section 8. Open-ended fund companies are a relatively recent concept in Hong Kong, but they are actively examining open-ended fund companies. So I will make sure that I give this a fair bit of coverage. Then a set of rules that's been out for a few years now, reporting and record-keeping obligations for over-the-counter derivative transactions, OTC derivative transactions. It's all to do, in this case, with reporting to the HKMA. If it came up, I think it would be 1 question, and I will give that coverage. And that those are the 9 sections that we will be dealing with in topic 2. There is actually 1 more. It's actually, no, I beg your pardon, 9.8, legal identity identifiers come under section 9, but as you'll see, it's almost a one-off on its own. Okay, SFC notification requirements. This is the page I think you should be familiar with because there always seems to be a question popping up. Now, there's the 7-day requirements, as I refer to them, under section 1.1. notification under Section 135. I wouldn't worry about Section 135. Let's look at the 4 notifications. Notice of intention to cease conducting the regulated activity as soon as possible, or not later than, there we are, 7 business days prior to intended cessation date. So if you intend to cease conducting a regulated activity, for example, dealing in securities or asset management, you must inform the SFC not later than 7 business days prior to the intended cessation. The second 7 days, notice of intended change of business address at least 7 business days in advance. If you're going to change your business address, maybe you want to cut the rental cost, you've got to give 7 days notice to the SFC. The next 7 days, any changed information supplied to the SFC within 7 business days of change. What information? Well, it covers the representatives, that's the individuals working for you, responsible officers, or substantial shareholders. And we covered those concepts in topic 1. And then notice of any change of directors within 7 business days of change. Now, I've really hammered this 7 business days because there's no other days to remember. And I would say there's a 50% chance of one of those 4 points coming up in a paper 6 question. So there you are. There's a free gift for you. The knowledge that 1 of 4 has a 50% chance of coming up. Information in annual returns to the SFC. So the licensing and registry information rules set out required information, including reporting periods, any change in information previously supplied to the SFC, which I would say is common sense. Annual return must be submitted within 1 month of anniversary date of licensing, and annual audited financial statements must be sent to the SFC within 4 months of the financial year end. You may have come across that requirement in other papers. Annual fees, this is the only paper where they raise the concept of annual fees. They are payable at the same time as submitting your annual return. This is with regard to licensing. If fees late, the penalty is 10% of unpaid amount for first month and 20% for each subsequent month. So pay your fees on time. Breaches of laws and regulations. Yes, I've seen this point examined a number of times. Intermediaries required under the Code of Conduct to report to the SFC immediately any material or suspected breach, infringement, or non-compliance by itself, an employee or appointed agent with the relevant, here we go, laws, rules, regulation and codes, and also the requirements of any regulatory authority which apply to a licensed or regulated person. In practice, to be on the safe side, if anything is breached, just notify the SFC. There's no downside in doing that. There certainly is if you don't, because if they discover, they'll come after you hard. And I've seen questions where it's 1, 2, 3, 4, and the 4 laws, regulations, etc. that they list, they all require notification, including guidelines and guidance notes. Okay, let's move on to the first of the rules we have to cover, and it's in section 2, financial resource rules. Please be aware the financial resource rules only apply to licensed corporations. Remember that registered institutions are covered by the capital adequacy requirements coming out of the Hong Kong Monetary Authority. That point has been examined. So just remember, financial resource rules apply to licensed corporations only. Second point there, corporation must keep records of sufficient detail to establish if requirements have been complied with, make information available to the SFC within 5 business days. A lot of detail there, not regularly examined, but has been. Licensed corporation must report as soon as practicable to the SFC. Now, this is a very, very important point. If they cannot meet capital requirements that we are going to learn about in a moment, and should cease to carry on activity. Now, you should do that in writing as soon as practicable and cease trading. However, as we will see, if the SFC says it's okay, you can then continue trading. And the SFC may suspend license or allow corporations to continue to trade subject to certain conditions. Now, 2 of the important levers that the SFC have in ensuring that systemic risk is minimized. That is to say that nobody goes bust in the system. One is the financial resource rules that we're covering now, and the other is the insistence of a statutory audit, and we'll come across audit a little later. So section 2.2 looks at paid up share capital. Licensed corporation must maintain a certain amount of paid up share capital. Now you can see from the table, basically anything to do with dealing, advising, where you hold client assets, it is 5 million Hong Kong dollars, including asset management. But if you are involved in securities margin financing, the minimum is 10 million Hong Kong dollars. That's the only two you have to remember. Are the numbers examined? They have been, but not regularly. So just remember, 5 million paid up share capital. Otherwise, it's 10 million for securities margin financing. Now, there are a number of situations where you're exempt from the requirement, and they're listed in the 4 bullet points at the bottom. But the overriding issue is that if you do not hold client assets, then you do not have the paid up share capital requirement. If you do, then it kicks in. The next requirement is with regard to liquid capital. Your liquid capital, which is liquid assets minus ranking liabilities, must be greater than required liquid capital at all times. If it's not greater than required liquid capital, then that's when you must once again inform the SFC as soon as practicable and cease trading. Now, at paper 6, we do need to know the required liquid capital level. And again, if you hold client assets, it is 3 million. If you do not hold client assets as part of your activity, it is 100,000 Hong Kong dollars. And if you're an approved introducing agent, that is an agent that does not get involved in the transaction, just introduces an investor to a dealer, and then the required liquid capital is 500,000. Again, it's not that difficult. There's not that many numbers. Once you remember 3,100,000, unless, well, the 100,000 where you do not hold client assets. Bottom of page 5. We're told that liquid capital calculated in balance sheet amounts prepared and adjusted or adjusted on specified bases. And then you've got 4 conditions for the balance sheet. I used to tell candidates, never, never examined. And then, of course, we started to see a question or two. Be aware of it, outside chance that it could come up. Now we come to notifications to the SFC. Now, I've given you the main one already. That is, if you cannot comply with capital requirements, that's the required liquid capital and the paid up capital, you must notify the SFC in writing as soon as possible, cease conducting the activity unless the SFC permits you to continue. And then there are other situations where you must notify SFC in writing within 1 business day, and they are listed under 2.4. 2.5 stipulates the returns you must make to the SFC. This is licensed corporate, including asset management, must submit additional financial resource rule returns to the SFC. The main point to remember is if you are permitted to hold client assets, your returns are made on a monthly basis. If you are not permitted to hold client assets, then it's 6 monthly declaration statement for period to June and December. So monthly, if you hold client assets, every 6 months, if you do not hold client assets. 2.6, top of page 7, approvals by the SFC. SFC may approve the following for specified periods. Here's the approved introducing agent that I referred to earlier. That's the main one. I wouldn't worry about the others. 2.7, offences. Breaches of the financial resource rules are an offence. Remember, this is the law. This is legislation. And an offence punishable by fine and or imprisonment. Imprisonment is when fraud is involved. So I've spent a bit of time on the financial resource rules because they come up in every SFC licensing exam. Well, that may be an overstatement, but it's not far off it. I would not go into paper 6 without being familiar with the financial resource rules and having done the required practice questions.